Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, July 1st, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not investment advice. I am not a financial advisor. I cannot give individual investment advice. Please do your own research. Do your own due diligence on any of the ideas before investing. Consult a financial advisor. It's your money. It's your responsibility. Before I get started, I do want to plug the newsletter. The reason I make these videos, shameless plug, it's not out of ego. This is a loss leader into the newsletter. And what is the newsletter? The Actionable Intelligence Alert newsletter, which I publish monthly. And in it, I give various ideas, investment type ideas, speculations that tie back to the themes and ideas that we talk about in these videos. And some people find that interesting and useful. So far, it's been fairly profitable for the last few years. And so if you're interested in that, there's a link in the show notes where you can go and subscribe. I also have a Patreon where, to incentivize you to give me money, I will, if you sign up for the Patreon, $5 per month, you can cancel at any time, by the way, I will give you a sample of my writing. I will give you the last company that I put into the portfolio. And so that will give you a sense of the writing style, the ideas. Then you can make a further decision if you want to go and participate in the newsletter. Recall or remember that if you participate in the Patreon, you don't get a new pick every month. Some people think that's what I'm saying. I'm not saying that. What I'm saying is you will get the last researched addition to the Actionable Intelligence Alert newsletter. That's to incentivize you to support me on Patreon. So that's the shameless plug, and we'll get into the news. So again, there's this push and pull on what's really happening with the U.S. economy. You know my view on it. I've talked about it extensively over the last few weeks. Basically, in my view, there's competing data, but in the end, I believe that the lag effects of the historic rate increases that we've had, historic from the point of view that the fastest rate increases we've seen, we just haven't had time for those to make their way through the economy, and we're slowly but surely seeing that. And as I said last week, I believe that if you just go back 1 year, and it usually takes a lag of a year to 18 months for the tightened liquidity to make its way through the economy and start affecting various sectors. This time last year we were at 1.25%. So it takes a while. We're at 5 and 5.25, somewhere in there. And it's going to take time for that, other 400 basis points to work its way through the economy. But it is. And one of the things we're seeing is bank credit is going down. This is from the St. Louis Fed website. If you're interested in any kind of economic indicators, if you go to the St. Louis Fed, what's called Fred website, you can type in anything in the search, and if they track it, you can get a chart. So this is the change from a year ago, bank credit, and you see what's happening here on the right. I mean, bank credit is contracting massively. And what people don't understand is new money is largely, or for a good part, is created by banks making loans, right? And I'm not going to get into the whole banking sector and everything they have, but it's a major catalyst for economic growth, asset growth, liquidity, these type of things. And it's contracting. It's contracting very rapidly. Now, this is just what I pulled off a tweet. I didn't bother to go back and do a 50-year, up and down, but that would tell me this would be a situation where I would not, this is going to contribute to economic weakness and contraction, in my view. Bank credit, this is an economy that is almost solely reliant on expanding credit in loans. And if we don't have that, and we're having a decrease in volumes, you could see it's probably going to go zero. I'll add this to the things that I'm tracking, this percentage change. And once we go negative, then you're actually contracting credit. And how people think that that's going to be economically positive, I don't know. So I just point these things out. Again, we're not making forecasts here. I'm not a PhD. I'm now casting. I'm telling you what's happening and trying to assign a probability. The last leg of the bullish argument on the economy is employment. Employment is holding in there. As a matter of fact, initial claims were down last week. Okay, they're just not going up. So employment still relative is hanging in there. I don't want to say it's strong. It's hanging in there. But eventually, I think, as I said before, the lag effects of the tightened liquidity continue to make their way through the economy, and as we progress through the second half of the year, I think those manifestations of those cracks are going to widen, and we're going to see unemployment start to rise, and it will be acknowledged, I believe, later in the fourth quarter or early first quarter of next year that we are in a recession. And so that's why I'm holding my powder dry, making a few little picks, a few little additions here and there in the portfolio for some special situations that I think that around uranium. I think we're going to get into that a little bit later. It's so bullish, the fundamentals, it's unbelievable. But I don't think it's time to go whole hog. We had another report, I think, that home sales were up like 20%, I think, last week, the last report. And so you have you have little pockets here and there because we haven't built enough homes. We've typically built in the past, if you just want to go back in history, 1 million to 1.25 million homes a year. We haven't done that. And so we have this demographic cohort of millennials that's trying to do household formation, and there simply isn't enough homes, right? And so I think that as long as people have have jobs and have the wherewithal, they're going to try to do what every generation has done in the past, which is, have children, have a home, yada, yada, yada. And so, but I think that, a lot of these things that's what I'm saying, cross currents that you're getting. You say, well, housing's weak. Well, it is, but it isn't. I mean, if you look at the National Association of Home Builders, the index is creeping up. So as long as people have jobs, they're going to spend money. They're going to feel, consumer confidence was at a recent high. Okay. So as long as people have jobs and feel like the prospects for their jobs are good, they're going to continue to spend money. They're going to continue to make these. And so you have those pockets, even though you have manufacturing in a recession, and you have various pockets of the economy not doing well and slowing down, as is the service sector. So we'll get into that a little bit later in some of the other slides. This is an example right here. China manufacturing PMI is still below 50. Last week they reported the most recent, it ticked up, but we're still have a manufacturing recession in China, which makes sense if you have, Europe in a recession, basically, and the US and other areas of the world slowing down, right? So that makes sense. We will see, I believe, US PMI, manufacturing PMI next week. So that'll be interesting to see where that's at. So just wanted to point that out. Here's some news from Germany. We've got the highest rate of corporate insolvencies in 20 years now reported in Germany. I don't have a link to the article, but this was a tweet said there was an article, but it wouldn't come up when I tried to link to it. But anyways, energy crisis and inflation push more German firms into insolvency. There were 8,400 corporate insolvencies in Germany from January to June, up 16.2% from the first half of 2022, and the biggest percentage increase in more than 20 years. So I think it's instructive, what's happening. I will point out something else too. They just had a local election in Germany, and an Alternative for Germany candidate won the election. That's the first time that's happened. That was in an eastern area of Germany, of where the former GDR was. I'm not going to link to the Guardian article that talks about it. You can look it up, but immediately various groups in Germany came out and are lamenting the fact that the rise of the ultra right wing, they went full Auschwitz on this. They actually mention it. There's, that's not going to really work going forward. People are turning to the hard right and to the hard left in some places because the central, neoliberal elite is failing them. Okay. And so if the ruling elite, the neoliberals, the post-World War II globalist, what have you, neoliberal, deal isn't working for people, then they're going to have no alternative. Nobody's listening to these people, and so they're going to turn to these parties. You're seeing the same thing in Greece had an election, for example, and some ultra, I don't want to say ultra, but right-wing parties made it into the parliament now. The New Freedom Party, which is kind of a center right, I guess. I don't want to say center right because they're kind of establishment type people, but you're seeing this all over. They're going to have elections in Spain. The right looks like it's going to win there. You're seeing that in Argentina, where center right and even a libertarian candidate is polling well, where the Peronists and Kirchners are probably going to lose power there. So you're seeing this all over the starting to pick up steam. And, of course, you're going to see the press, lament about ultra right-wing nationalism, bring up the ghost of, 1930s Germany, 1940s Germany. I don't think that the AfD represents that. People that are Germans that listen to this can weigh in. One election doesn't make a trend, but I believe that's the first time that they've won an election inside Germany. Of course, there are, members of the European Parliament that are AfD candidates that or politicians like Christine Anderson and things like that. So that's the same thing. When Christine Anderson came to Canada, even the Conservative Party leader, Pierre, I can't remember his last name, basically said that, anybody that would meet with these right wing, so it's a demonization. You can't deal with these people on the merits of the arguments, but you are going to attack them as being, 1930s type. I can't say it on YouTube. So we'll see what happens. We'll see if this trend continues. People are mad. You see what's going on in France. It's funny. People don't like me mentioning this, but I will. I've said for a long time that Europe is descending into irrelevance and chaos. It's eventually going to break up. I'm not going to get into all the reasons why, but a lot of places imported populations that were not compatible with Western civilization. I'll just say that. And now you're seeing the results of that. These people have not assimilated. These people have not been able to enjoy what or have their expectations met. And so it's been several decades in some cases. And so you're going to have tensions boil over. And this is going to continue. This is not going to stop. It's not a one-off. And not only that's why you're seeing, the rise of other parties. There's a lot of discontent for the neoliberal world order, rules-based order of, post-World War II neoliberal globalism. People have had enough of it, and it's wearing thin. Now with the continued war in Ukraine, putting more and more of burden on the EU citizenry and voters, people are asking the questions. What are we doing? Okay, my standard of living is going down, my prospects are going down, and no one cares about the people here in these particular countries. We're more worried about bringing in immigrants and dealing with that, and not dealing with these problems and just pretending like they don't exist. I mean, you take a guy like Macron. Where is he? Why isn't he out there talking? Because he doesn't care. These people don't care about their own populations. They're globalists, and that's what they care about. And so they don't know what to do. They can't do anything, and so the thing spirals out of control. We'll see how bad it gets. you go on Twitter, you see you can see the videos. I mean, I'm not there. I don't know what's going on, but you know, uh, I will point out one thing. We had the same thing in 2020, I believe it was, with the riots and discontent here. Now you have it in Europe, you have it in these other places. I don't, but we're concentrated on, what's going on inside of Russia. Okay. And if there's a chaos and a change in government there, and I would, I'm kind of jumping around here, but my thoughts, but we're more worried about that and thinking that that's unstable when I see, people burning down cities in France. That's, I don't know. They have this saying, I think, pull the beam out of your own eye before you point out the speck in your neighbor's eye. But anyways, this is politics, right? And this is the globalism failing. This is the neoliberal world order failing, and old, tired, worn out ideas and politicians failing. And we'll continue to see this. They have no answer for these problems. They're just running the same playbook, and it doesn't work, and they don't know what to do because they're just installed people that really aren't real leaders. They're just there. They've been installed by the establishment to carry out the will of the establishment. And now that this thing is not working, and all over the West, this is not just in France, it's in the entirety of the West for the most part, it's simply breaking down. It's not working, and the problems and burdens are going to get worse. And so you are going to see more radical type solutions be put forward by more radical type politicians and people. That's just what's going to happen. And so you can expect more censorship, more crackdowns. Who knows what's going to happen, but the way the society is moving in the West is not going to work long term. There's going to be changes. And I've said it before, and I'll say it again. The EU will eventually disintegrate. The United States will eventually disintegrate as a political entity. These are radical, hyperbolic statements that get people unnerved. That's going to happen. These large bureaucracies and huge institutions, they're just not compatible with where we're going. And so the financial burdens, the debts, they just are not, it's not going to work. And there's no path forward. Okay. And so eventually people are going to say, hey, wait a minute, this isn't working for us. We don't want to be part of this anymore. And it's going to continue. The political divisions you have in many of these places, especially like the US, they're not reconcilable. There are people on both sides that do not want to live together anymore. And so instead, that was recognizable to me in Ukraine 20 years ago when I first started going there, okay? That they should have split the country right at the Dnieper River, but that's not how it works, right? Same thing in the US. The US should split up into several different countries, but it's not going to. It's not going to be peacefully done like that. So that's my prediction. That's the basis that I operate from. These are radical, provocative statements. Most people aren't going to agree with it, but that's the basis of where I, long term, I'm not talking about next year or the year after. These are going to be 20-year, 30-year events. It's just, the math doesn't work. These systems that are set up in the West are not, they just cannot continue. And so they won't. So continuing on with the economics, during the pandemic, student loan debt payments were suspended. And so instead of people taking the money, people that owed the money, taking the money and putting it in the bank and putting it aside, knowing that they're going to have to start repaying their debts. The same thing with rent forbearance and all these other forbearances, mortgage forbearance. People didn't basically have to pay for anything because of the pandemic. People didn't understand, because that's how most people are, that eventually the forbearances were going to go away, and then they were going to be on the hook for all this money that they didn't have to pay. Okay. And so that's what's happening. We saw that with rents and mortgage payments. People, we're going to see how that impacts people. Now we have student loans, and we have a report that came out that said that with the forbearances going away and people are going to have to start paying their debts. I think the average debt payment I saw on another article was like close to $400 per month for the average student loan borrower. And so we have this data now. Says the upcoming restart in student loan payments is set to weaken the U.S. consumer, according to Morgan Stanley. A whopping 34% of survey respondents said they will not be able to make the payments at all. 37% will need to cut their spending in other areas. So you're talking about millions of people here that have student loan debt. 34% of them will not be able to make the payments at all, and 37% will need to cut their spending in other areas. So that's why you have politicians like, Mr. Biden trying to get student debt relief, because it's a populist type situation. It's free money, right? You went and got your degree in French, medieval French literature, and there's no jobs for that. You didn't go there to get like a civil engineering degree or mechanical engineering degree where there's demand for that. You've got some obscure thing that you studied that there's no market for. And so now you're on the hook for tens of thousands of dollars in debt, and you can't pay because you're working at Starbucks as a barista. And then you're wondering why isn't this working out for me? I saw this TikTok video of a compilation of people complaining about how their life sucks, but we went to college, we did everything we were told to do. Well, your inability to understand the world around you is the problem. The world has shifted. If you have a degree in some type of engineering or something like that, if you can't get a job, then you're just a sap. But people have these sociology degrees, psychology degrees, these made up degrees where there's no demand for any of their degrees because they were told to go. They didn't qualify. Here's the main problem: most people that are in college shouldn't be there because they don't have the ability to do the work. So they're there to get a liberal arts degree, to get some piece of paper that says they have a 4-year degree because they were told that's the entrance into the job market, into the middle class. Well, it was a couple decades ago. It's not like that anymore. In the meantime, you can't find a plumber, electrician, or an HVAC guy. And all those guys are laughing all the way to the bank, making big money, working for someone. I mean, I've told the story before. There's people out there that run some of these businesses that are in their late 50s, early 60s. They've spent 30, 40 years building up a business, let's say an HVAC business. I know of several instances of this. Their kids are not interested in taking over the business or working because they're professional people. They, engineers, doctors, whatever. They have their own life. They're not interested in dealing with, an HVAC business. So the guy's doing, 1.5 to $3 million a year in revenue. He's taking about 600, 700 grand a year out of the thing's making that much money. Okay. And they can't get enough guys to work there, or people to work there. And so I know of one person that went to local high schools and said, hey, whatever shop classes still exist, send over a person and we'll train them, or a couple people will train them and, pay them while we're training them to do this. And, maybe one of these people will blossom and maybe the idea is, 5-10 years down the road, we can sell this business to them or work them into the business, take the business over. Couldn't get anybody to do it because nobody wants to do that, right? Because college, everybody has to go to college because we've told everybody they need to go to college, and the most people in college can't do the work, and so they get bull crap degrees that aren't worth anything, and then they go out into the job market and go, why can't I make any money? Why can't I get a job? How come I'm not in the middle class? How come I can't form a family? And they have all this debt because of all the reasons we've talked about before. And so they're stuck now. But nobody wants to go to the local community college, take a 1-year class in HVAC, and go around and fix people's furnaces and air conditioners and make big money. That's not what I want to do. I want to be in an office, and you know why. So what's going to happen here is, how much of an effect on consumer spending is this going to have? Okay, probably pretty decent. So here we have Ford Motor Company is going to cut jobs in the U.S. and Canada to trim costs. And I got this again. where I have an article I'm referencing, I will put a link to it in the show notes below the video so you can go read it yourself and make your own determination. These are just my editorial comments based on my way of thinking, which you may or may not agree with. It says Ford Motor Company said on Tuesday it will begin layoffs this week, impacting mostly engineering jobs in the U.S. and Canada as part of the Detroit automaker's move to exit unprofitable locations and cut headcount. The Wall Street Journal reported the company plans to lay off at least 1,000 salaried employees and contract workers in North America, but Ford did not specify the number of roles to be affected by the move. Quote, delivering on the plan includes adjusting staffing to match focused priorities and ambitions while raising quality and lowering costs, unquote. Now, I took these comments from previous week when I talked about Ford Motor Company basically losing their butt on EVs. You know, Ford will lose $3 billion this year producing EVs, but that's their priority, right? Because the people that are at the top of Ford believe EVs are the way to go. Okay. And so that's what they're going to do. They're going to invest in that and lose $3 billion a year. I would add this. This is another news item that came out. Said last week, the federal government, actually the taxpayers, that's you guys listening, loaned Ford and a South Korean company $9.2 billion to build battery factories in the South on top of federal tax credits to entice buyers. And so, as we've pointed out before, you can't make money selling these things, okay? And eventually you have to make money at some point, or they don't, or you're not going to stay in business, okay? I know everybody loves Tesla. Tesla doesn't make any money making these things. All this stuff is based on subsidies, okay? Subsidies and handouts and tax credits and mandates from the government. And I personally do not want to invest or own any companies that are basing their business model on subsidies, tax credits, and things of this nature, because government is fickle and governments change, and they're going to change radically over the next few years around the world. And I think that a lot of this stuff is going to go away because it simply isn't affordable. Okay. It just is not affordable. And you can mandate, you know, no more wood-fired pizza ovens in New York City. You can do that. You can mandate that no electric cars will be sold, or no internal combustion cars will be sold in California. And there's not going to be any more houses built with natural gas heat in New York. You can do that until the consequences of doing that hit the average person, because they don't put two and two together very easily. People have to learn through experience. Their critical thinking is marred by their poor education and also just everyday life, living their life. They don't have time to sit down and think about these things. But eventually, you have to make money in a business or it goes out of business. And I wouldn't want to tie my business model of my business to the fickleness of government bureaucracies and politicians. But that's what, you know, evidently that's what the Ford Motor Company has chosen to do. Now, I do want to own lithium mines and copper mines and things like that, because they're short, and that's the that's the heads we win, right? Ford's got to buy that stuff from somewhere, and that's not, and that is also, those supply of those things are being held back by government. So it's a heads we win, tails we win more. But I would never buy Ford Motor Company, because what kind of management isn't able to see what we see, or what the CEO of Toyota is able to see? If you're going to lose, how long can you lose $3 billion a year on your, you know, on this? At what point do you become profitable? The things cost too much. And the reason they cost so much is because the technology, okay, you're talking about battery chemistry. Battery chemistry is not going to improve at the same scale of Moore's law. This is the problem that a lot of people have made. They have cross-conflated Moore's law and the technological advances around semiconductors as it applies to everything technology based, and in this renewable thing. The renewables are based on basically cheap money from the Fed, 0% interest rates, government mandates and subsidies, and the fact that we were in a commodity bear market for the last 10 or 15 years. All that's going to reverse now. We've already seen that the bear market in commodities is going away. Supply of materials is not sufficient, so the price will go up. We've already heard Siemens say that on the wind turbines, why they're losing their butt on wind turbines, one of the reasons. Orsted or Vestas said the same thing. And what did the CEO said he needs? He needs more subsidies from the government to compensate. So these are not real businesses. Okay, these are manifestations. These are political fantasies that haven't been thought through. And again, we just want to supply the material and the raw materials because those are going to be in short supply. But this is not going to work. Notwithstanding the fact that there could be some technological breakthrough that saves this industry, that lowers the cost, that extends the range, that what have you. Okay, but I haven't seen that yet. That's not really what's happening right now in July 1st of 2023. There's always, like I said before, I get the MIT Technology Review and I read all kinds of cool things in there that all these scientists are working on. But the ability to get something out of the lab and out of a science project into the real world engineering and manufacturing at a cost that's cheap enough to be a consumer good, well, those are two different discussions. You can, there's all kinds of manufacturing efficiencies and things like that, but these things are just not like automatic. You need major breakthroughs, and battery chemistry is limited by physics and chemistry. So we'll see what happens, but you're not going to lose $3 billion a year and uh, stay a viable company for very long. Notwithstanding the fact that we're entering a recession. So let's talk about some positive stuff. France does a 180-degree change on nuclear policy with new reactors to be built. You can't really see this, but I'll go ahead and read it. It's an EDF press release. It says the EDF group files requests for authorizations to build the first pair of EPR2 reactors on the Penly site. Go to the highlighted areas. It says yesterday the EDF board of directors decided to proceed with the planned construction of the first pair of ERP2 reactors. And then you go down here, it says EDF proposes to build 3 pairs of EPR reactors in order on sites at Penly, Gravlines, and I can't pronounce these places. Basically, it's 6 reactors. And so the program for 3 pairs of EPR2 reactors will mobilize 30,000 jobs per year during the construction and more than 10,000 during the operating phase. And so, you had a situation where a couple of years ago, France was going to decrease, remember, following the lead of Germany, they were going to decrease their nuclear fleet. One of the positive things that France has going for it is that it has a very extensive nuclear fleet. So they were going to decrease that. And then they reversed that view, okay, and decided to not do that. And now they're going to authorize new builds. And so you see what we said was going to happen is happening, okay? You're not going to power. Get it through your head, people. You're not going to power industrial scale technological societies with intermittent power. It's not going to happen. I know some people want it to happen and they think it should happen, but it's not going to happen. And we continue to predict exactly what would happen. We said that they would eventually. I'll go out and make another prediction. I don't know when it will happen. It's going to take political change, but Germany will turn its reactors back on and build more reactors. You cannot exist without doing this. Okay, you've cut off natural gas from your biggest, cheapest, closest supplier. That's evidently not going to get turned back on, and so you need to get the power from somewhere. And so nuclear is the way to go. And it's not just in France. Belgium's going to extend the life of 2 of its large reactors. Remember, I talked about this maybe a year ago. I can't remember when it was, when the Belgians were going to turn off their reactors, right? And so here we go. Belgium has reached an agreement with the operator, NG, to extend the use of the country's nuclear reactors by 10 years after Russia's invasion of Ukraine prompted Belgium's governing coalition to rethink plans to rely more on natural gas. So that was their idea, right? They were going to use natural gas and get rid of the reactors. And of course, renewable rebuildables are always in the mix, right? And then it says Belgium was to have exited nuclear power entirely by 2025, but will now extend the lives of its 2 newest reactors Dole 4, and I can't pronounce this, Taihangi 3, according to the agreement. Quote, it strengthens our electricity supply, reduces our country's energy dependence, and guarantees the production in Belgium of low-carbon, low-cost electricity, said Prime Minister Alexander De Croo. Quote, the war in Ukraine has profoundly changed Europe's energy landscape, and it has become urgent to rid ourselves of our dependence on fossil fuels and take our energy back into our own hands. And so you can look across, to the east and see that the laboratory of the Energiewende, energy transition, did not work in Germany. So why go down that road when you have these reactors? I believe one of the reactors both these reactors are like 1,000-megawatt reactors, I think, or slightly larger. So these are big reactors. And so again, we said this would happen. When physics meets politics, physics wins, as Doomberg says. So we're seeing this more and more now. Okay, and this is positive for us. This is why I think that the uranium story in the nuclear renaissance is going to be longer, and it's going to go higher than previous spikes or previous bull markets, and it's going to last longer because the world is now adopting, energy security, energy reliability, cheap energy. If you don't have these things, you're not going to have a prosperous, stable economy. And that's become obvious now. And so you're seeing these countries one after another. Japan, we already talked about many times, even though they had the Fukushima Daiichi accident, is turning its reactors back on and is going to build more reactors. It's not because it's physics, it's necessity. You have no other options. Okay. Yeah, you can play around with wind and solar, but it's not going to power. I try to tell people I'm not against wind and solar. I build these things. Okay. This is how I get, my healthcare benefits. This is how I get, walking around money. I get paid a lot of money to build these things, but they're not solutions. Okay. They are political. We're going through a political immaturity stage in the world, which we're exiting now as reality is now upside the head. And so, I would love to be put out of business and not build another industrial scale solar or wind farm and just build more nuclear reactors. And I think that'll eventually happen as the zeitgeist changes. There are uses for these particular, wind and solar in unique cases, but not to the extent that many people think is going to change the world. The materials simply don't exist, and the things just do not last. I mean, there was another thing on Twitter where somebody just built a solar farm in Nebraska. They just turned it on, and a hailstorm came and wrecked the thing. So, this is the problem, and the adult person understands that in order to have a stable, prosperous society, certain trade-offs need to be made. And the risk with nuclear is actually less people have died from nuclear power in the history of nuclear power than probably fell off roofs last year installing solar. I mean, I don't have the stats, but we do know that nuclear has the least amount of fatalities throughout its history than any other power source. I've seen people fall off turbines. I've seen, people fall off roofs installing, all kinds of accidents. So that's just reality. And so there's a lot of canards around waste that are easily, if you educate yourself, are easily, disabused. Let's put it that way. So we're going to see more of this, not less. And we're going to see, the continued build out of the nuclear fleet, especially in the emerging markets, because they have no choice. So here's an article. They just had a conference, links to the articles, of course. Hydrocarbons to power the world for decades. Again, hydrocarbons aren't going anywhere. Why? Because they are the king of energy. They meet so many needs and fulfill so many characteristics that make them useful for work in machines that they're not going anywhere. And so, again, when I tweeted this article, I said, going back to the Soros dictum to find the premise that is false and bet against it. And the forced by government dictate and fiat, the forced energy transition was not going to work. It wasn't going to happen. And of course, some states and countries here and there will try things like this. They will fail, and then those governments will change, and then hopefully rational policies will be instituted. California makes all kinds of statements about getting rid of internal combustion cars and trucks and diesel, and shut down nuclear plants and all these other things, and it's not going to work long term. Same thing in like New York State. And you're going to see in another slide that I have what the result is. People leave the state. People aren't going to live in state or countries which are following policies that cause their standard of living to go down, as long as they have the ability to do that. So on with this slide. Oil and gas will remain leading sources of energy for decades to come, major industry players echoed during the inaugural Energy Asia conference. Quote, energy transition is going to take a lot longer. It's going to cost a lot more money and new technologies that don't exist today, said Hess Corporation's CEO. Now, the environmental zealot will say, well, what do you expect the CEO of an oil and gas company to say? Well, that's what he said. You can either agree with it or disagree with it. I agree because I know energy. I've studied it. Energy is the end all be all of economics. If you don't have any energy inputs, you have no economy. It's that simple. And there's a reason why we use hydrocarbons, which I've explained many times. No need to go into it. If you don't get it by now, you don't get it. You lose. When it comes to clean energy, the world needs to invest $4 trillion a year, and it's nowhere close. The oil market will be more constructive in the second half of the year, with production going up to 1.2 million barrels. I don't know what it's talking about here, he predicted. He noted that what I wanted to get to is this statement. He noted that the biggest challenge the world has is the underinvestment in the industry. That's our whole basis of, why I'm so bullish on offshore oil and gas. We've talked about work that people that are way smarter than I am have done, like Adam Rosenzweig talking about the depletion, the peaking of the shale basins in the U.S. The Eagle Ford, Bakken basins having peaked, the Permian still growing, but getting close to peak. And so we've had this 10-year dispensation, this bounty of these shale basins producing oil and gas for us. But at some point they do peak and then go into decline. And when that happens, those areas have been picked up the slack for the entire world vis-a-vis oil supply. And when they peak and go into decline, with demand still growing, by the way, in the East, India, China, we've talked about this before, where do you go? Well, you're going to have to go offshore. Okay, so I'm connecting the dots for you. Offshore oil field services, offshore services are my highest conviction theme right now, because if you have exhausted or went into, what's the next? I mean, you have a shale basin in Argentina, the Vaca Muerta. It's being constricted by politics in Argentina. But where are you going to go next to pick up the slack for the Permian when it goes peaks and goes into decline? Okay, you're going to have to go offshore. But the problem is that the offshore industry has been allowed to atrophy. The people, the machines, the boats, the rigs, they don't exist. Yeah, there is an industry, but it's quite a bit smaller than it was at its peak. And so we've ignored it. It's just another one of the, choo-choo train, real economy industries that we've ignored because we've financialized our economy over the last 20 years and, thought that we could just, everything was going to be digital. And we didn't either understand or ignored the reality that if you don't grow it or mine it, you don't have it. And so that's your opportunity. So we've talked about Shell. They have a new CEO. They basically are moving away from some of their other commitments that they were going to do all this investment into renewable energy. The returns aren't there, so they're pulling back from that. They have a new CEO, and so now we're just reporting that the head of renewable power has left the company. It says Shell's renewable power head leaves after the company shifts strategy to invest more in oil and gas. Of course, they're an oil and gas company. They should focus on their core competency. global role overseeing renewables to be eliminated. So that tells you you basically have driven a stake through the heart of your renewables business. We've seen these companies do, I've seen BP do this like 2 or 3 times already, okay, where they start a renewables business, it's in vogue, and the CEO comes in, beyond petroleum. That was what they had said BP stood for. This is like 20 years ago. And they were starting up this BP wind and all these things. And then they got out of it because the returns weren't there. Then you get a change in government here in the US or whatever, and they're going to get back into it. And it's just, it ebbs and flows based on politics and based on whatever, legislation that you can goes through. And we've seen that. It says here, Shell aims to be selective on green power projects, seeking profit over just lower emissions. Well, a lot of people aren't going to like that. I know there's been a lot of wailing and gnashing of teeth from the environmentalists, but this is how it is. Maybe they should buy one share and go to the, go to the annual meeting and glue themselves to the podium. I mean, I don't know what to say. This is what they should do. Shell should focus on what their core competency is, which is oil and gas exploration, production, and the derivatives of that. That's what they should do. And that's what they are doing, because the bottom line is always the bottom line with these companies. That's it. I've said it before. So I find this interesting. People aren't going to like this either. They don't like me veering into the politics, but politics and the emerging multipolar world are going to be direct influences on investing and capital allocation, whether you like it or not. And so what's this article saying? It says Rosatom to mine lithium in Bolivia. Well, Rosatom is the state atomic company in Russia. Rosatom, for example, if you're in Bangladesh, which they're working on a project now, I know for a fact, or some other countries like Turkey, they will come in, they will sign a contract with you, and they will build, design, build, supply the parts for a nuclear reactor. They will supply the fuel, they will run it for you, and they will deal with the waste. Okay, and then they will slowly but surely turn the plant over to you, as long as you agree to buy uranium from them and things like that. Keep them involved. There's different, business opportunities for them. And so they're getting, now Rosatom is getting involved with lithium mining in Bolivia. It says Rosatom has signed an agreement with Bolivia's YLB to mine and produce lithium in Bolivia. Investments in the project amounts to $600 million, with production targets of 25,000 tons per year, up to 4% of the global market. You see, the reason I put this on here is because as we sit around and try to dictate to the rest of the world what they should do, this is part and parcel. Again, it's not one news item, it's not one event, but the decline of the West. Instead of biting the bullet and saying that the rest of the world is going to be, we're going to become, as a percentage of overall economic influence and influence around the world, the United States is going to become smaller inside that. And we're going to have to deal as peers with other people instead of subjugate other people. You could get away with that 20, 30, 40 years ago when these countries were not, industrialized. They were not wealthy. They were, like I said before, they're kind of like young teenagers. You could boss them around. They're not like that anymore. And they continue to grow the rest of the world. And so what is a country like Bolivia going to be more interested in doing a deal with? This is part of the multipolar world that the emerging powers in the East are offering to the rest of the world. We're not, I don't know the terms of this. I don't know the discussions that happen, but this is 25,000 tons of lithium that Ford Motor Company is not going to see, more than likely. This is going to be directed towards China, Russia, India, countries that are in the BRICS that are emerging. And you're going to see more of this, not less of it. And so where's the United States? This is 4% evidently of the global market. And Rosatom is getting involved in this, okay? This requires diplomacy. This requires sitting down with people and treating them as equals and peers. This entails sitting down and discussing things for win-win situations. I know that some people would say, like, well, the Chinese, don't operate in that situation. It doesn't matter. What's the perception of a country like Bolivia? They have this resource. who are they going to be more apt to develop it with? The United States and Europeans, uh, or Russia, China, India, places like that? I would suggest the latter. Okay. And I think that we made a horrible mistake involving ourselves, over the last 20 years in this Iraqi situation, Afghanistan, and now this is the major worst foreign policy decision in the history of the United States. Not only getting ourselves involved in a civil war in eastern Ukraine, which is what it is, but not only that, when we did the nuclear option of confiscating another country's assets. We didn't even do that during World War II. And we know how much those two regimes were demonized and to this day, demonized. And from what I understand, we didn't even do that then. Okay. So there's things called, this is what people look at. They see us espousing Western values, the international rules-based order. And as some other diplomats in other countries on the other side have said, this rules-based order is nothing but whatever works for the U.S. and its vassals or its partners, whatever is the best for them. That's the rules-based order, and it's not necessarily a win-win situation. So I suggest you're going to see more of this, not less of it. So here's our old friend Robert Friedland, billionaire, copper magnate. He makes provocative statements. That's why I like to put him up here. But he knows the copper market probably better than anybody else. That's what he does. But he is subject to making provocative statements. So what's he say here? Billionaire miner Friedland warns of a copper, quote, train wreck as supply stalls. Well, we've been talking about that. Says Ivanhoe founder says he fears copper prices could jump tenfold. Well, I don't know if they're going to jump tenfold, but I certainly think they're going to go to levels that nobody can anticipate right now. $10, $12, $15 a pound. That's what Gorian and Rosenzweig say. That's what some other folks have said. He's saying they could go up to $30 a pound. Why not? There simply isn't enough. We're not finding enough. The underinvestment has built up, and the problem is all the easy stuff's been found in the nice places, right, inside the garden. Now we have to go into the jungle. We have to go into places that are not nice places with governments that aren't necessarily, as one person said the other day, governments that are grabby, let's put it that way. They'll let you build a $1 billion mine and then change the terms on you. And so that's going to increase risk. That's going to slow down development. Okay. Not only that, the United States, I've said it before, shoots itself in the foot. We've said we're going to do this energy transition, but yet we're not allowing mining development inside the United States, where it's a jurisdiction that you would think, would be more stable, but we're not doing that. And so they have this smart aleck tweet guy says, I kind of like this. He says, alternative headline, billionaire Friedman fears he will go from filthy rich to Buffett rich. Well, yeah, a lot of people are going to become extremely wealthy during this commodity bull market super cycle, which I think is going to exceed every other super cycle that we've seen in the past. So I wanted to talk about the rise of India. People are ignoring it. You see here, this is from U.S. Global Investors. Frank Talks, his weekly, Frank Holmes' weekly editorial. And you see the current GDP per capita of China since 1990 and India. And basically, India is at the inflection point that China was back in, 2006, 2007. Do I think India will grow as fast as China? No. Why? China is more of a top-down economy. India is not. It's a democracy, so there's politics involved. But the trend is unmistakable. And another reason why you might want to consider the Actionable Intelligence Alert newsletter. I mean, we have a company in there. Let me just back up real quick. A lot of people will poo-poo and say India and say, well, the market's overvalued, blah, 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 blah. But we have an opportunity inside the newsletter that we've identified that allows you to take advantage of the Indian economy, to be investing alongside people that are in India that have access to deals. And as a matter of fact, the largest asset of this holding is a 51% stake in the third largest airport in India that just recently went through a terminal expansion. And I would suggest to you that the value just of that one holding of this company is probably twice the amount of the market cap of the company itself. And this is the type of things that we look for in the Actionable Intelligence Alert newsletter. Plus the fact that this particular vehicle that trades, that allows you access to Indian markets, the Indian market, not necessarily through the Indian stock market, trades at about a 30% discount to net asset value, and is you're investing alongside one of the a billionaire in Canada that has a similar philosophy to Buffett and Munger. So that's what we're talking about, and that's why this is another one of my large holdings. Probably one of my top 5 highest conviction is India. I see tremendous opportunity there. The demographics are positive. Yes, they have a lot of problems. One of their problems is they're a net energy importer. So obviously, if oil goes to $100 or $150 a barrel, that's going to be negative for them. But they are on a rapid build out of their nuclear fleet, rapid electrification process that happened, increase in their transportation network. So a lot of positive things are happening there that nobody even talks about. And, I'm interested in those type of things over the long term. So I wanted to talk about this. We talked about capital flowing, not only just actual money and financial capital, but human capital is going to go where it's treated best. And so this was in the New York Post, link in the show notes. It says New York State revenue reportedly falls nearly 20% as Florida, Texas see boom. So during the pandemic, a lot of people got ticked off in some of these blue states and cities about the onerous regulations and mandates. And they said that's enough is enough. And so people said, I'm out of here. And, notwithstanding the fact that high taxes and all the other situations of living, or not able to, I don't think a lot of people are going to leave over the pizza oven ban, wood-fired pizza oven ban in New York City, but this is just symptomatic of the mentality of these people running these states. They're just living in a fantasy world. They're politicals, politicians, and they're not running these states for the benefit of the people. They run it for the benefit of their donors and their whatever psychotic views they have in their head. Same thing in California. Mr. Gavin Newsom is probably going to end up being your next president here in the United States. He has aspirations of being president. If you think this Biden guy is going to be the president, I just don't see that happening. And so, Gavin Newsom wants to turn the U.S. into, bring his policies that have worked not very well in California to the rest of the United States. So anyways, this article, you can disagree with me. They just flipped from a huge budget surplus in California to a huge budget deficit. That's what happens, right? When you rely on financialization of an economy, and it reverses, this is what happens. Anyways, New York State revenue reportedly falls nearly 20%. New York State is reeling from a COVID-era exodus to low-tax locales as revenue during the fiscal year is down nearly 20%. New York and California saw the steepest drops in tax-generated revenue this fiscal year, while Florida and Texas saw their coffers fill up thanks to a pandemic-fueled migration. Oh, and by the way, the best and the brightest, people with the best prospects and the capital and the know-how, that's who leaves. All the welfare recipients, people that don't want to do anything, no loads, parasites, people on the dole, that's who stays in these states. They don't migrate, or very few of them do. So the best and the brightest, people with the capital, people with the know-how, that's who leaves. It says New York has collected 19.5% less in levies, while California has seen its state tax revenue fall by a whopping 25%, according to data revealed by Bloomberg News. Meanwhile, Texas reported a 12.2% growth in state tax revenue, while Florida has collected 9.9% more in levies so far this fiscal year, according to the data compiled by Irving Brookings Tax Policy Center. So there you go. Capital always flows to where it's treated best. Now, the problem is that a lot of people come here from California. I live in Texas, by the way, or they come from these states, and they bring their stupidity with them. Now, I don't mean stupidity as a pejorative. I mean it as the inability to understand cause and effect, because they will come here, they'll move to Austin, for example, or someplace around there. They get a good deal, because even though prices are going up here in Texas for housing in a lot of these urban areas, they still can get a good deal relative to what they're sold their properties for in California. Then they come here and they keep the same political mentality. They're not able to understand, well, all of these politicians and policies I voted for are what caused me to leave the state of California for the most part. So in a large part, let's put it that way, not everybody, but a large proportion. So this will continue. This will continue on a worldwide basis. People will leave because they don't want to be a milk cow for the government and just get taxed to death to support dumb policies, to be told that you can't have a gas-fired stove in your house because a whack job governor thinks that that's going to, lower, carbon emissions in the planet. It's nuts. It's nutso. It's just weird. These are weird people with weird ideas, and eventually, you have to get hit upside the head. Eventually, people wake up. So, anyway, facts are the facts. I just wanted to point this out as part of the ESG, peak ESG. I talked about Ford losing their butt on EVs. Here's VW now. Volkswagen slashes EV production due to consumer reluctance. Volkswagen is to cut electric car production at one of its biggest factories after strong consumer reluctance led to far lower sales than expected. I think Volkswagen made like a multi-tens of billions of dollar bet on EVs to transform the company. Getting back to the article, the business is pausing work on electric vehicle models for 6 weeks at its plant in Emden, Northwest Germany, and will lay off 300 of the 1,500 workers involved in making them. The company blamed lower subsidies for buyers of the cars across Europe and higher inflation for a drop in consumer interest. The cars cost too much. They are not, the average cost of an EV, I think I heard, is $66,000. I mean, give me a break. No one can, who's buying these cars? They're for wealthy, suburban, liberal people. And so that is not going to be a market that's going to replace, until you get the price down to 25, 30 grand, something like that, whatever, to displace an internal combustion engine, to get the charging infrastructure set up so people don't have range anxiety. People don't want to sit there for 30 or 40 minutes or an hour waiting for their car to charge when they're on a trip, when you can just go to a gas station, 5 minutes. It takes me longer to go in and get a Mountain Dew and stand in line than it does to gas the car up. So who's sitting there for an hour? I guess true believers. And, you've heard the stories where people have tried to drive across the U.S. and what a pain in the butt it is, trying to find a charging station. And then you get there and it doesn't work, or they get there and it's the wrong connection, or who knows what. Who wants to deal with this when there's, tens of thousands of gas stations? You pull in and you fill up and you're out of there. So until they get the cost down and get that solution, I just don't see these things taking off. And companies that have bet their future on this, this is why Toyota has not done this. Okay, they continue on with their hybrids, which I think is viable. Okay, that makes more sense. You have a smaller gasoline engine, you have the batteries, and then the thing can run on either. And then when the battery's low, the engine charges the battery. Okay, but you still get, like, the Prius still gets, I think, 65 miles to the gallon. So you're still, that's, in my view, a better solution. But why don't you let the market decide? Okay. We'll see what happens, but it's not positive. Again, we're past peak ESG. People have caught on, and unless you force people by government mandate and tyranny, well, then they're just going to buck it. I mean, they're just, I know they've tried to introduce the central bank digital currency, I think 2 or 3 times in Nigeria now, and the people just aren't going for it. That was, for some reason, the test case. Again, if they want to use sufficient force, I guess they can force everybody to buy a car, but I just don't see how they stay an electric vehicle, but I don't see how they stay in power. And of course, the resources in the West, the over-indebtedness, the overall decline is not going to allow for these subsidies to continue forever. Hard choices are going to have to be made here in the next, as we go forward. The choices get more difficult, not easier for the countries of the West. Okay, that's it for this week, guys. Again, thanks for your subscriberships. Thanks for staying with me. Again, one other item I forgot to mention. For the people that like to listen to this on a podcast, I had to get off Spotify because it's so janky, it doesn't work. There'll be a link in the show notes going forward for the, I'm using Podbean as the podcasting platform for these weekly market updates. You can go there, you can download. Of course, it's another app you're going to have to download on your phone. That's just how it is. But from what I understand from the initial response, people are finding that it works sufficiently for them. So that will be available for those of you that like to walk your dog or go to the gym or drive to work or what have you. I've had a lot of people say that they find it useful. So I found another platform that seems to be working. If it's not, if something else is wrong, let me know, and we'll try to fix it. Okay, that's it for this week. Thank you, and we'll talk to you next week.